Hey, this is Justin with DayTradeTheMarkets.com, and I wanted to look at today's E-mini S&P, and this is happens to be a 1-minute chart. You can use this on literally any time frame, just so you're aware. It could be a swing trading time frame, micro scalping type frame. Same logic would apply. But what I wanted to talk about today was looking at the idea of acceptance versus rejection of what we call major aggression bars, and how that can really give you a pretty nice roadmap to help you stay on the right side of the market, or at least at a minimum stay away from the wrong side of the market. We kind of look at it as job one is avoid being on the wrong side of the market, because if you can avoid more bad trades or get into fewer bad trades, that's going to make a huge difference on your P&L. And then number two is get in on the right side of the market, so you can ride the wave when you do have a situation where one side's clearly in control. So what I've got here is a chart with all of the different pieces of evidence, and by pieces of evidence, what I mean is we have various real-time pieces of evidence. I'm going to really focus on the relative aggression bars today, but we also talk about our bigger picture bias, bigger picture key levels, and other real-time pieces of evidence, with the idea being that each of these pieces, each of these components is like a piece of the puzzle, and the more pieces of the puzzle come together, the more clear your a puzzle is, and the more clear your image of what's going on in the market is, and the better decisions that you can make with that. So what I want to really focus on today is the relative aggression bars. It's kind of the first building block of our software. Just to be clear about what those are, really what moves the market is aggression. A lot of times people will say, oh, there were more buyers than sellers, or there were more sellers than buyers today, but that's obviously a misnomer, because by definition every time a contract is traded, there's one buyer and one seller, or more, obviously. And so the only way the market moves is if one side collectively is more aggressive than the other. In other words, if there were just everyone had limit orders in there, the market wouldn't move. But when one side is more aggressive than the other, collectively the market moves. So if you can see that underlying aggression and see it in real time, and so you can see which side is more aggressive at a given time, and then not only that, but to what degree that side is more aggressive, you have quite an edge. So what we really like to focus on, we have level 1 buying and level 1 selling, level 2 buying and level 2 selling, and then level 3 are extreme buying and selling. We really like to focus on especially these level 3 bars, but these level 2 bars as well, with the idea being that if you have, for example, a level 3 buying bar, the first expectation is that the low of that bar should act as support, and if the support can hold and then we can take out the highs, that's what we call follow through or continuation on a level 3 buying bar, and it often indicates a pretty, that certainly bulls would be in control of the market. Conversely, the same thing with selling. You can apply this to level 2 bars as well, but really the focus is on level 3 bars, and that's what we call our roadmap concept and the idea here. So what I've got here is, if you look at this chart, and there's overview videos on the website, but we've got the filter down here, the green filter that says bulls are in control short term. We've got support zones in real time, support zones, resistance zones. We've got these decelerations here, which tells you the market's kind of slowing down at a very short term basis. And then we've got these, here's a level 2 selling bar, here's a level 3 buying bar, level 2 buying bar, and so forth. And so what I'm going to do is just take off everything except for the level 2 and level 3 bars real quick. And so we're just left with, again, level 2 and level 3 buying and selling bars. And we ask ourselves, is there follow through or is there rejection? So early on, our first structure of the day, and our first structure of the day is also very important. We want to see, just to give us a bit of an opening concept, which side is more in control. And you can see that it's a selling bar, and so a selling level 2 bar, not quite a level 3, but the first expectation would be that the high of that should act as resistance. And you can see that did not happen. In fact, we shot right through there. As we made new highs, we had this level 3 buying aggression bar. So not only did the first selling structure fail, there was rejection, which gives us clues, but then it was done so on a level 3 buying bar. And you can see that bar didn't even test the low before it took out the high, and it was off and running. Okay, so the fact that we rejected a selling structure right there, rejected on a level 3 extreme buying aggression bar, is a pretty bullish indication in the short term. Okay, so bulls are in control. You wouldn't want to fight that being on the short side. And so then you can see the next structure is this level 2 buying aggression bar. Again, didn't even test the lows. Didn't even test the lows there. We took out the highs. Here's another one. Didn't really even test the lows. Took out the highs. This one tested the low. This one tested the low. This level 3 bar tested the low. This one did not. This wave of level 3 bars tested the low. And it's not until we get up here into this gap made by sellers a little while back that we start to see some selling come into the market. Here's the first real selling structure we've seen since the beginning of the day, which is a level 2 selling aggression bar. So again, that doesn't mean sellers have taken over and the thing's going to make new lows. It's just telling us this pure wave of buying is at least being challenged. You see some selling that's starting to come into the market. Okay, a little bit more there. Gets a little wild here toward the end of the session, which is per the norm, but it stays within that gap. Also, the real-time support resistance zones that you probably saw earlier before I took them off. So again, the idea here, and what I wanted to get through in this video, is just how you can use this idea of acceptance versus rejection. So again, rejection of the first selling structure, acceptance above buying, etc., to really give you a nice roadmap as to which side is in control, so you can avoid being on the wrong side of the market, and you can then focus in on, drill down on the next level, which I'm not going to talk about in this video, but drill down the next level and focus on getting into low risk, high edge trades in the right direction with the market. So again, it's just about trying to make better decisions. Better decisions lead to better results, and that's really the name of the game. So hopefully that made sense. If you have any questions about this, certainly let us know, and we'll talk to you soon.